Okay, let's talk about what's been happening. Overnight, Korea's stock market was slammed. Now, this was the big news, a lot of anxiety coming into it. Commentators blaming an assortment of things, including the situation in the Middle East. There's no doubt that maybe that was a trigger, but I just say be careful when Wall Street falls in love with the trade. Everyone loves this sort of out of America trade right now. They're pounding the table, buy everything outside of the United States. They've had a good run, right? You can see, we'll bring this chart up in a minute. They've had a really good run, but just make sure you're careful with these things. And also, if you're investing around core principles like earnings, right? Everyone kind of talks earnings, the mother's milk of markets. Right now, the best earnings trends are in Japan, and guess what? The United States. And so I would treat any exposure, by the way, down here in Europe, I would just treat that as a trade, to be quite frank. But we do have folks coming on who like that trade as well. So we came into the year 2026. We were told to brace for a big hit, right? Everyone sort of agreed it's a midterm election year. So what does that essentially mean, right? Well, you can see midterm election years right here. Usually you have the biggest decline, average max drawdown. They're talking 18, 19%. The most volatility, that's your diamond up there. So it's a volatile year. You get this big hit. And then that blue sliver, that's your whole year, right? You get a gain, but it's usually the smallest gain. So it's everyone was sort of bracing for the worst. And I got to be honest, it kind of feels like this is played out already, right? I know it's been short a couple of months, but it feels like we've already gone through all of that stuff. But here's what's really amazing. And again, a shout out to Carson and the crew. This is really compelling. 2026 is the smallest range ever to start a year. So you keep reading about all this crazy volatility. Look at it, that little tiny thing. We have been in this little tight knot. I'm going to call it a coiled spring. And with that in mind, where do you want to be when this spring uncoils? Well, again, let's talk about where the opportunities are, because right now, every sector is above the historical trading valuation when you talk about 4P ratios. So on an absolute basis, everything arguably is expensive. But what really is expensive right now, industrials are extremely expensive. They're way off the range. They're, consumer staples, way out of it. The market itself, materials, again, utilities. These are your safe havens, right? So what's less expensive? Ironically, on an absolute basis, technology, IT right here, less expensive, and growth, right? So that's really amazing. Growth, again, everything is expensive, but less expensive. So on that note, when the market is out of that sort of complete fear mode and then people want to put money to work, where has it been going? Well, this is a snapshot of today's session about an hour ago. You can see if all the different niches in this market, large growth doing the best, large momentum doing the second best. This is where people really want to be when they think the coast is clear. I'm going to pull up some of the best movers of the day because it's a mixture of things. And one thing I'm starting to see is a lot of bottom fishing. At the top of the chart, coin associated with Bitcoin, a lot of good news on that today. And then there's memory, right? Memory took a dip, but it's been the hottest sector out there. People want to buy these hot sectors on dips. So STX, WDC, SanDisk, MU, all of those associated with that. And by the way, Datadog down at the bottom, starting to buy some of those software stocks. So a little bit of something for everyone, but you can see people want to make money when they think the coast is clear.